A look at the gold prices, which are trading in a tight range as markets fret over the US Fed that when it will start tapering its economic stimulus. Also, investors are favoring equities which have dented the metal safe haven appeal. On your screens, very flat trades coming in, 12:30 just about holding. The crude oil prices in the meanwhile have seen a bit of a decline coming in, but they still are holding around those 6-week highs. The upbeat economic data from the US and China has been supportive. They are the world's first and second largest oil consumers. The prospect that a strengthening US economy could persuade the Fed to begin bringing down curtain on its easy money policies, it's something that has dampened too much of a sentiment there. Let's bring on board then Shiv Srivastava, who's Managing Director and CEO, iGuru Research and Advisory Services. He joins us live as well. Shiv, hi, welcome. What's your sense coming in for the crude oil prices? That's the only area which has seen strength in 2013, many other sectors.
Yeah, crude is very in a range bound and trading between the $95 to $98. I think the 94 is the major support, as we've seen some good news from the US economy and the China economy, and I think that some bounce back expected and it will go up to $98. In Indian scenario, I think some bounce back in 6,100 it will reach within 1 to 2 days.
Vijay, what's your sense in the energy pack? While the crude is up 6% in this year, it really is the natural gas prices which are trading nearly 16-18% on the higher side.
Manisha, there's no doubt natural gas is, I'm so sorry, natural gas is seemingly outperforming crude oil on the multi-commodities exchange. But my guess is it's now likely to run into some amount of resistance in the absolute near term. So should I see 258, 259 kind of levels, I might just take a very small punt on the short side with a target of 250 to 251 levels to square up my shorts. Having said that, I think over a period of time, should all other factors remain constant, the probability of natural gas outperforming crude oil in the near term does appear to be fairly okay. And I think up to the expiry of the current month futures, it is natural gas which is likely to see some amount of positive trader bias.
Okay, so we have a buy call coming in there, but the gold and silver prices have seen some pressure yet again. And Shiv, how would you want to take a look at that, especially with the appreciating rupee? Not much of gains there.
Yeah, the gold is trading in a very narrow range and seems to $12-13. As per the Fed tapering concern, might be down further, and I think 1180 is the major support in the international market, and I think about MCX it will go up to 28,500, and one can sell at 29,200 in keep of target. It will go down up to 28,500 in coming days.
Vijay, what's your sense now coming in for silver? Because we're not making any newer levels here. It's been in that range itself, 42,000 perhaps on the lower side, not even those levels, and 45 on the higher side seems to be quite capping.
Absolutely right, Manisha, and I've been talking about how the silver bulls are not even able to recover their cost of carry, which they pay for rolling over their long positions from one settlement to the next. Now, this has been somewhat of a chronic problem for the leverage bulls in silver. That is one reason why I've been advocating staying away from leverage longs, both on silver and gold. So one needs to basically await 42,400 odd levels before one can allocate some more money on investing in the physical space. At this point in time, I just don't have the confidence to go out and buy in the leverage space at all. It's been 4 quarters now and nothing seems to suggest on the charts that this kind of a slide is likely to get arrested. I would want at least one settlement to see the bulls recovering even their cost of carry. Forget about making even notional gains. Prior to that, I would not basically be comfortable going out and buying longs in the leverage space at all.
Okay, so no buy calls there, a sell coming in for gold and silver from our experts. But let's talk about the base metal prices. And the data from China has been positive. The import numbers are slightly aggressive there. Shiv, how would you look at those numbers and how do you see the copper or the zinc prices taking an impact from there?
Yeah, in spite of the good economic data from China, no major movement seen in base metals as the holidays are on the board as international market. I think the rupee might also be come down further, and so the base metals will no major room to move upward. I think the copper is the weakest material in commodities, and I think it will go up to 413 in coming days, and the zinc is also very bearish, and I think it will go down further.
Shiv, do you think it's the year-end phenomenon working into the markets? Because most of the base metals are, while in negative in 2013, how would you see the new year opening? Would you say it's oversold? Do you see some more weightage coming in here?
Yeah, I think some bounce back expected in New Year, but no major movement expected. I think the demand is not very encouraging from the global side, and I think the copper will be, it will take major support at 430 on MCX, and after 430 it will see some bounce back at 460 in February.
Vijay, how would you look at the space now? Because on one side the data has been immensely strong from US and China as well, but even then that hasn't really happened, or rather helped.
You're absolutely right, Manisha, and I'm not seeing anything on the screen which would still imbibe any buy confidence on the industrial metals. There is absolute lack of trader confidence either on the price front or on the volumes or open interest front. There is simply no sign that a trader, an average trader, feels that if he does not buy today, he will have to pay a significantly or even a marginally higher cost on the next trading session. Unless there is a sense of urgency to buy, I don't see how any upsides, if any, can be sustained. And here again, I think talk about aluminium, talk about nickel, talk about copper. I think if you were to roll over your long positions from one settlement to the next, it's embarrassingly difficult to even recover the cost of carry, forget about justify going long. So unless that really happens, unless any industrial metal overcomes a previous swing high, I don't see why the bulls will rush into the fray with writing checks for rolling over their long positions overnight. I think all upsides are getting sold into. There is a tendency to deleverage, and that malaise has to be reversed before the bulls can actually come back into the fray.
And the Forward Market Commission has given excuse me, the 6 national commodity bourses 3 months before time till March 2014 to register their warehouses with WDRA to ensure quality and quantity of the produce lying with them. The exchanges MCX, NCDX, NMCE, ICX, ACE and UCX were to register their warehouses with the Warehousing Development and Regulatory Authority and obtain the accreditation certificate before December 31st. Since the registration process will take some more time, the Forward Market Commission has extended time till the first quarter of 2014. To the agro space, where the sugar futures are steady as the market awaited the decision on import duty after last week's meeting. On your screens, 0.25% down, but the government is considering cheap loans and incentives to sugar companies for production of raw varieties as part of efforts to help the beleaguered mills. The country's farm minister had said that on Friday. In pulses then, and the chana prices have seen some decline due to ongoing sowing operations and prospects of a better crop, though hopes of a pickup in the spot demand restricted the downside, and you have seen very flat trades coming in there. In the edible oil space, soybean gained on fresh buying support as millers' demand for the oilseed improved in spot markets due to a gain in the rupee that made soy meal exports attractive. The market, though, is awaiting the USDA report tomorrow to get clarity on the crop status. In spices, jeera gained on local buying and on fresh exports demand, though the good progress of sowing and favourable weather limited the upside. The turmeric futures also saw some decline due to approaching new season and supplies and large old stocks, though the concerns about the quality of the crop due to unfavourable weather in Andhra Pradesh is something that's limiting too much of a downside there. To guar then, and the prices have seen some decline yet again on prospects of higher production due to an expanded area under cultivation, though a decline in daily supplies as farmers hold back waiting for better prices has limited the downside. Let's hear out then Alexander Robert of Principal Pac West Consulting, who says that the demand is not an issue when it comes to guar, but supply constraints remain.
Unconventional activity, which is what drives guar consumption, so hydraulic fracturing, in the U.S. is at record levels today. So the most recent quarter and the quarter before that had record hydraulic fracturing stage counts, which is really the critical indicator to watch to understand guar consumption. Now, guar consumption in 2013 hit record levels of consumption. So activity in the North American oil field is robust. So we don't have an issue with demand and consumption out in the field. At current guar prices, where prices were 2 to 3 years ago, was very compelling for American farmers to switch over. And since guar is a good rotational crop, it's nitrogen fixing, it's compelling from that perspective, but at current guar prices, no incentives.
All right, so that's the view really coming in from US. Vijay, what's your sense on the guar prices now? I mean, the demand is still on the stronger side, then there are some supply constraints as we heard.
Manisha, it is these factors that is providing some kind of volatility on the prices, failing which I think the downsides would have extended, and you would have probably seen sub 12,500 levels, and on Guar seed you would have seen sub 4,500 levels. As and when these news items hit the public domain, you will see traders trying to rebalance their positions, which is lending some amount of volatility in prices. Barring which, I think the overall picture in the absolute near term at least seems to be that of lower tops and lower bottoms formation, and you should be seeking short selling opportunities at higher levels.
How would you look at the edible oil space, Vijay? Because that's another area which has seen a lot of choppiness going in. The international cues are slightly stronger, and the rupee, of course, favoring it as well.
Manisha, the stronger the rupee gets, the more pressure I see on prices in edible oils. Take the case of CPO, which is down today. I think soya oil futures are bucking the trend, and at 714, 715, I expect resistance there. CPO, I think, can basically violate even the 560 levels, so I'll prefer to short CPO at higher levels.
All right, so a call on shorts coming in for the crude palm oil prices there. But another thing that has been moving, and let's get the prices on your screens for that one there, and let's get mentha oil prices, because we have seen some more declines coming in for that one. It's 0.25% on the lower side, Vijay. How would you want to trade onto that one? 843 on the last count is where it shut sharp.
I would prefer to buy it. I'm so sorry. I'd prefer to buy it close to 825 levels rather than enter long now, because I think there is a pressure on mentha oil prices, and bullishness will return only after the 858, 860 band is overcome. Unless that happens, momentum-based buying is completely ruled out. If value-based buying is what you're looking at, await another 3% decline from here.